Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. It's non-farm payroll Friday, and some of you have been probably watching the reaction to NFP and wondering, is this a good number, a bad number? I never really concern myself with whether or not it's good or bad. I try to just compare it to what was expected. And some of you might know there were a lot of expectation because of the storms from last month, or the month before, I should say, that a lot of those folks would get back to work. And this was pretty much in line with what economists were expecting, with some of those post storm jobless coming back to work after. It's pretty much in line. And a healthy jobs picture is likely. And we were curious. I know I was curious. This is something we've been talking about in Sector Secrets Mastery, which is, are we still in the good news is bad news camp? Or are we finally in the place where good news is good news, that a in-line or strong jobs number is good news? Because it hasn't been that way consistently up until about August. And in August, we firmly heard from Jackson Hole Powell, right? And Jackson Hole Powell said, we're going to cut rates. And ultimately, that seems to have changed the way that data is being reacted to. Because once upon a time, a good jobs number created negative response, or an inline jobs number created negative response in the indices. And that does not seem to be the case. So if rate cuts are a coming, and they are, and jobs are still holding, remember, that's the second mandate of the Federal Reserve. So reason for them to keep on with the tact of the jobless claims being lower would be good. Non-farm payroll being higher would be good. Jolts being higher would be good. So we'll see if that's the way it's going to carry into September. All right. So with that said, I wanted to show you all something. And this is Trading View. So that I can do this cool thing where I can rewind back to about 8 o'clock. And I'm going to show you how the hourly price movement ranges. And by the way, this is the S&P. Let me move the clock over. There we go. I'm going to show you how the hourly price movement ranges work with an economic event like this. So this is where we were at 7:50 p.m. I'm going to go ahead and push play. And you see how I'm going to pause this right here. Let's go back just a smidge. So what I want to do is show you where, right here, where the HPMR shifts in front of the non-farm. So that creates the zone. That creates the zone that we want to take advantage of. And ultimately, that zone is where the overall price movement would be expected to go. If it's green, it's support. If it's red, it's resistance. And ultimately, if you are a trader, if you like futures, if you're a futures trader, and if you are a trader that likes trading economic events, I just wanted to watch it one more time. There it is, right down there, 54.70, right? And there's your low right there at 54.70. Wow, was it that accurate this morning? Sometimes we sink a little bit lower into the zone. It blows my mind. And same thing happened with the NASDAQ. If you take a look at the way in which, again, before the NFP, let's rewind it back to about 8 o'clock. All right. Play it forward. And you'll see right there, right around 18,728, 18,703, that area. Here comes the data. Yep, tags 18,720, so just a little bit below. And that's how an hourly price movement range works. And then now you'll see that they've crossed. And you might say, Rog, what does that actually mean when they've overlapped or crossed? And that's just a reflection from the hourly price movement range to say, look, we've exceeded the 68% probability of price movement, and now we're in that rarer air of 32%. We're trading much higher than normal volatility. So it's a warning. By design, it's a warning. And that's the way this morning responded. So obviously, it's taken the S&P and the NASDAQ off its lows. But frankly, it has yet to even overcome in any meaningful way the lows from the 3rd of September. So this is still a pretty heavy place in terms of the range. I won't call this a bearish environment. It's neutral. But in terms of where we are from September 3rd sell-off, it's still pretty heavy. And the same thing can be said for the NAS. We have a couple levels that are worth watching. Let me delete some of these lines. There we go. We have a couple levels that are worth watching. 18,915, but this is still a very heavy. Overall, it's a heavy week. Nasdaq's been more bearish than the S&P and the Dow, mainly because it's actually financials and healthcare that have been, for the most part, leading the charge in terms of sectors that are heavily weighted in the indices. So what we're looking at right here is the Dow and the S&P benefiting from what has largely been a pretty strong healthcare and financials relative to tech, right? Relative to tech, relative to energies. It's been a pretty strong sector. It doesn't mean that they're necessarily moving in a way that's high probability quite yet, but it's better than a lot of the other sectors out there. I definitely keep an eye on relative outperformers in healthcare and relative outperformers in financials. All right. So let's see what we have here. Questions from our Simpler Essentials room. What do we have here? Can I briefly cover what it means when my two hourly price movement ranges converge or invert? Yeah, higher than normal price. So GRL, yeah, it's the 68% probability that goes up to 32%, which we would absolutely expect with a non-farm, right? We would absolutely expect price movement to likely exceed the normal range during that event. But remember, until the event, until 8:30, that 8 to 9 a.m. HPMR is perfectly fine. At 8:30, when that volatility hits, it's going to adjust. So we want to take that read. It's so important to get that read before the hot zone. And that's why I use that replay on TradingView, so everyone could see that. So that's what it means. It just means, in a lot of ways, it does mean be cautious, right? Because this is not normal price action. But in the most helpful sense, in the most strategic sense, it is a warning that price movement has exceeded its normal volatility for that period in time, and it's in that 32%, as I like to call it, the rare air. All right. What else do we have here? How do I do the clock app? It's just an app I found on the internet. Yeah, it's just a little app that I use. All right. Questions from our YouTube. All right. How long after a major gap do I avoid trading a stock to give it time to settle? Example, TJ Maxx. Gaps don't keep me away per se. No, gaps in and of themselves. The reason we gap is completely different. So the reason for the gap is what might keep me away, Gwen, but the gap itself is nothing more than really support and resistance for me. So if we just gap because of news or gap because of earnings, it makes sense to give that gap maybe a session to simmer down. But beyond that, 1 to 2 sessions at most, Gwen. All right. ES says, many thanks for showing us the results of August swing trades. My pleasure. Would also be great to see the swing results for all of the months in 2024 to get a picture through various conditions. Yes, you can do that really easily. Come join me in the Sector Secrets Mastery. You get all the trades. I send recaps out, the entries and the exits. All right. Next up is, and I like showing August in particular because it was a tough month. It was a month where a lot of traders got absolutely whack-a-moled by the yen and carry trade. So I thought the August, what we were trading, more so than how we did, but what we were trading was such an interesting part of where the focus in the Sector Secrets Mastery was. All right, next up is Miles says, so true. Hourly price movement ranges are a must. I don't know about the sleeping part. You sleep and make. I wish it were that way, but they do work really well. Thanks, Miles. Do I think the rate cut is priced in? Megawatt, I think what's really interesting about any data, especially one as anticipated and projected as the rate cuts, it's not a matter of whether or not I think the rate cut is priced in, but how many. Yes, if we're going to be specific to September, it is priced in. It is expected. To talk anything other than rate cuts is just absolutely bonkers. It's just, if someone says, well, the Federal Reserve doesn't have to cut, they're not going to cut. That is just so far from the data and has no bearing in the reality of what is very likely to come. If we look at data, we just won't then start talking our opinion. And I think if you've been hearing for whatever reason we may not get a cut, remember that's just absolutely, absolutely off base. The question now is, do we get a quarter point cut or do we get a half point cut? It's not a matter of no cut. It's how much do we get? And right now it's 41% for a half point cut and it's 59% for a quarter point cut. And so when we take a look at what's happening with expectations, is this one priced in? 100%. It's just a matter of what do we get. Now that we go out to November, is that priced in? Yeah, that's priced in. So how far out do we go and before it's not a matter of whether we get a cut or not, but how much of a cut do we get kind of scenario? I would say easily the cuts are priced in. Gosh, I mean, they're just priced in pretty solidly, I'd say through, wow. They're priced in pretty much clear out to June, which is not necessarily good, Megawatt, because data could certainly shift this. But when we have anticipation for rate cuts, some of the trends that we get in the expectation of lower rates are some of the best. Once the actual rates start to drop, then we'll see the reverberations of mortgage rates and lending rates and probably some more expansion as money gets actually in the real world cheaper to borrow. Because right now we're anticipating the lower borrowing costs, but when they actually do start to become markedly cheaper, it should then help with another boost of actual activity as opposed to just anticipation. All right. So here we go. And thank you for the question, Megawatt, because it is one I think we're all in some way asking. Yeah. All right. What's the difference? Ren asked, what's the difference between my upcoming webinar this month and the class in October? So Ren, if you're not familiar with the way any class is here at Simpler, there's usually one or two webinars so everyone can see what the class is about and frankly get some instruction as to what I'm doing right now. So a lot of what the webinars on September 20, what are those dates? September 24th and October 2nd. Those webinars are basically going to be what are the metrics to grow an account? A small account, how to grow a small account, how to grow a medium-sized account, how to even grow a large account. But what are the metrics? What are those repeatable processes that we all have to understand in order to do it? And I think for anyone at this stage in their career, once you've chosen, let's say you've chosen a number of indicators that you like, and you say, Rog, I know these are the indicators that I want to use. How do I grow an account from here? You're going to learn a lot from the webinar and the class. But let's say you don't have the indicators. You might say, Rog, I don't have a toolkit that I've settled on yet. This will also help because I'm going to give you the toolkit that I actually use for the class as well. So how much do you risk, right? So let's use the word risk. How much do you risk? How much is too much risk? How do you adjust the risk? What do you do with a trade that's going in your favor? Is it the same risk for the entire life cycle of the trade? And risk isn't just the stop loss. Risk is position size. Risk is a lot of different elements to what it is that as you're trying to grow an account, you understand there's such a thing as too much risk. There's frankly such a thing as too little risk as well. So we'll talk about a lot of those metrics and I'll show you some of my numbers. So at the end of the day, what's the formula? What's the process? What's the method? And then really even what's the mindset? Because for a lot of traders, if the mindset isn't right from the get-go, nothing else matters. All right. So that's really it. How do you grow a small account? How do you understand risk? How do you measure risk? What are risk measurements? And then if you understand the risk side of things, then the other side of it is the fun stuff. How do you grow an account? All right. Is the dollar being stubborn or am I being impatient? Stubborn in what way, Patrick? We got a question here. Is the dollar being stubborn or am I being impatient? Remember, gang, the dollar should continue to weaken if we have a central bank like the US central bank that's going to cut rates. But remember, we have other central banks that are also likely going to consider cutting rates as well. We know the Bank of Canada has already been doing it. So it depends on what the relationship is you're looking at. Is it euro versus US dollar? Is it Australian dollar versus US dollar? Is it Canadian dollar? So it depends on the US dollar. So you have to look at the other side of the pair, Patrick. Yeah, are you being stubborn? Fair question. It depends on the other side of the pair. Remember, US dollar is just a basket, and it's a basket of mostly euro, British pound, and Japanese yen. So you have to find a relationship where the dollar is weaker compared to the other one. I would anticipate more dollar weakness. You really want to see the euro start to move higher. But the trick in Forex, and I've been trading Forex for well over, it sounds funny to say, almost a quarter century, but I'll tell you this, it's the relationship of the currency versus the dollar. What currency are you looking at to appreciate versus the dollar? And not all the currencies will have the same relationship. All right. So ultimately, yeah, keep an eye on the euro. Patrick, keep an eye on the 6E or euro US dollar. That's probably the best way to understand US dollar weakness. But if you can find something that's even weaker than the dollar, then you realize then the dollar is not going to move lower. So you want to find something markedly stronger. Get that contrast of strength versus weakness. All right. Next up is Johnny asked, do I ever look at, I'm not even sure what those are. Jex, Vanna, Charm. What is that? Oh, Greeks. Oh, gosh, no. Thank you for asking, Johnny. There is no I don't look at Greeks. And here's why I don't. You might say, Rob, are you kidding me? Heretic. All right, here's why I do not look at Greeks. If someone were to talk about theta, I know it's time. How much time do I have? To expiration. I like to look at the chart. I like to look at the hourly price. If I want to know volatility, right? I look at volatility, I'll look at the hourly price movement ranges. I'll look at the daily price movement ranges. So the things that people like to measure with Greeks are oftentimes things that have redundancy if we understand trend, if we understand volatility, we understand how much time there is to expiration. So I don't use them at all. And Johnny, I'll tell you straight up, I don't even know what Vanna is. And Charm, I don't even know what that is. I know theta, delta, gamma, delta, those kinds of things. I don't use them at all. I know that anecdotally, when I buy an option, my delta is about 50 to 70, but I don't look at the rest. Yeah, no, thank you for the question. Not even a little bit. In fact, I'll show you right here. This is what my order entry looks like. I look at last, open interest, bid, and ask. That's it. So yeah, there you go. And if I could get rid of this implied volatility, which I do not look at, I would as well. It just really does not factor into what it is that I'm doing. I just look at last, open interest, and there's your bid and ask. So that's what my option chain information entails. All right, but thank you for the question. And I don't think it's necessary. I trade long calls, long puts in a cash account, and never once have I gone, darn it, I wish I knew the delta of this option, or gosh, I didn't know the theta was ramping up against me. Never once has that happened. So we can keep it really, really easy in terms of the information that we take in to understand the option. All right, gang. So as always, thank you so much for being here for Charts and Coffee. I'll see you Sunday for Top Tier Outlook. Pencil in September 2-2 and is it September 2-2? Keep forgetting the dates. September 2-4 and October 2nd, as well as October 5. That's going to be our 2 webinars and our class. Be good to each other, gang. Have a great weekend. I'll talk with you soon.